Good afternoon. We are back in studio. I'm Robyn Flynn, joined as always by Fred Pichette and Martin Spalding of Fred and Martin Mortgages. Good afternoon, gentlemen.
Good afternoon.
Hey, Robyn.
And a special in-studio guest this week. LJ Aguinaga is off. He's got some family things to attend to. So we have Thierry Bourbonnais from the Plex Doctor with us. Hey, Thierry.
Good afternoon, Robyn.
So great to have you here. We're so excited to talk about property management and all the cool stuff that Plex Doctor has to offer. If you have any questions about real estate or mortgages, you can text us at 514-790-0800. We will be getting to some of your questions after the traffic break. But first, we have a question for you. And if you know the answer, you could win some cookies from Felix and Norton. Our question this week, what is a pre-approval in the mortgage process? If you think you know it, 514-790-0800. Do include your name, and you can expect some delicious cookies from Felix and Norton delivered straight to your door. Guys, last week we were talking about what the Bank of Canada was going to do. They made an interest rate cut. How is this going to impact mortgages? Because I know a lot of Canadians have mortgages coming up for renewal in 2025, 2026. Mine's up for renewal in 2026, so I'm paying close attention. But what sort of impact do you think this will have, Martin?
Well, actually, most mortgages are up for renewal either this year or next year. So a lot of people call us up as soon as a announcement is made. So if the Bank of Canada overnight rate goes down, they think, oh, I've got a variable rate mortgage. Automatically, my rate is going to go down. In most situations, it does, but it depends what kind of variable rate mortgage you have. Because if you've got a fixed variable rate, in other words, your payment won't change, but the amount going to the capital and the amount going to the interest, or the principal and the interest, will change. If you've got a variable rate that is adjusted in terms of how much you pay on a monthly basis, then there is a change. And so, for example, 25 basis points, if you have a $400,000 mortgage, more than likely your payment will go down between $50 and $100 a month. So, good news. On the fixed rate front, I think the bond market had already baked in this interest rate reduction by the Bank of Canada. So we didn't see a lot of movement this week in terms of fixed rates. However, one thing that we're not talking about that we should probably underline is why is the Bank of Canada cutting its rate? And so I think we're heading into a bit of a headwind. So as much as this is great if you're a home buyer or if you're a mortgage rate holder or variable rate holder, the more macroeconomic picture is not as rosy. And so we think that fixed rates will start to come down because bond yields are coming down. So as we know, the variable rate is directly attached to the Bank of Canada's rate. Fixed rates are directly attached to the bond yield market. So if you're a first-time home buyer, this is good news for you because you got more purchasing power. Just because you have more purchasing power doesn't mean that you should purchase more house, but it gives you more purchasing power. And if you're renewing, like the vast majority of Canadians are, this is good news for you.
Now, Martin just mentioned, Fred, that this is not necessarily a good thing for the economy overall when interest rates come down, because usually that means that times are getting tough, right?
Oh, absolutely. Like right now, what we see out there is we're getting a lot of calls of people that asking for refinancing their property because they're a bit worried. And most of them also, they when they have the mortgage to renew, they say, hey, guy, what should I do? Back in the days, a couple of years ago, it was, oh, could you get just a good rate and just give me a good term with a good lender? But now what we see out there is people are concerned about their debt as well. And if the rates still continue to go down, I think it's the right time to refinance your property. We're going to talk about it later, but it's a good opportunity right now.
Thierry, I'm curious on the property management front. Do most of the people who own large plexes have variable rate mortgages or fixed rate mortgages? What is sort of standard?
I will say the vast majority have fixed,
Okay.
usually. Some are variable, so they're really happy to now it's getting down a little bit. But we see the pinch also on both sides, tenant and landlord now with the macroeconomic.
Well, actually, I'm sure Fred's going to respond to this.
But I would say most of the time people has a fixed rate on rental.
Right.
Most of the time, not all the time, because they could write off the interest that they pay on their loan.
Right.
which is makes more sense sometimes to have a fixed rate mortgage.
It's less risky when interest rates go up too, right? Because you can't just increase the rent month to month because your interest rates went up.
Well, and this is a great time to bring this up, is that often we get calls, and the first question that comes out of a potential for a person who's looking for a mortgage is, what's your rate? What's your rate? What's your rate? That's all we hear. And what you need to do is you need to break that apart. You need to break that down. Because very much in line with what Fred just said, if you're buying a Plex and the interest is tax deductible, then why are you so fixated on rate? Rate's always important, but what's more important are the conditions.
I would say, Martin, even if it's your primary residence, sometimes it's not strictly about the rates. It's about the strategy. If you're able to put a lump sum every month, an extra $100 or $200 that goes directly to the principal, that offset the rate if you use that strategy. In fact, at the end of the day, it's not strictly about interest rate.
And we often hear it is that we say to them, you're signing for a 5-year fixed, 5-year term amortized over 25, 30, whatever it may be. How do you know your life's not going to change, or your marital situation or your job situation? The conditions at the onset of the mortgage don't seem important to you, but God forbid, after 2 years, after signing a 5-year term, you need to break your mortgage, hold on to your hat. Because maybe those 5 basis points that you paid less when you signed for your mortgage, the bank's going to get you on the way out.
What are some of the reasons that people are breaking mortgages? Are you allowed to refinance early because you have debts you want to pay down?
You are, but there's a penalty, right? So what you need to do, and we're going to talk about refinancing in the third segment, but one thing that a lot of people don't factor in is that penalty. So we had a client had just finished renewing her mortgage, 6 months into it, got into a little bit of trouble with some debt, called us up, said, I need to refinance, I need to consolidate my debts. And then when we called the bank, the client called the bank, because we're not allowed calling the bank for the client. When the client called the bank, it turned out that the penalty for breaking her mortgage only after 6 or 12 months, I think it was over $20,000. So it's
not going to help you very much.
Obviously, she pumped the brakes and decided not to go forward, and because she hadn't factored in that penalty. And Fred will say it time and time again, the big banks are the worst for the penalties.
Now, you mentioned that people are always calling you guys up and asking you, what are the rates? What are the rates right now? Obviously, you can't guarantee rates when we talk about rates.
I knew you were going to go there.
Exactly. Like, you can't guarantee rates. It depends on somebody's circumstance. Rates change. What you say today could be different tomorrow, depending on what happens. But what are, ballpark, some of the rates that you guys are seeing right now?
Ballpark we see out there right now, if you're purchasing if you're a first-time home buyer purchasing your first home with less than 20% down payment, we could say it's below 4% right now, the trend. Wow. Obviously, if you're refinancing your property or renewing your mortgage, you're at 4, like low 4 right now. But again, like we said before, variable rate right now became a good option because there's so much instability in the rate. Knowing that prime rate might go down again, why not you try to go variable this time? It could be a good option.
And I think I said it last week. So Fred and I are split. Fred's always been a variable rate guy. I've always been a fixed rate guy. And this is probably the first time in 20 years where if I was signing for a mortgage today, I would definitely consider a variable rate. It's at parity, and where we're going economically right now, I would go for a variable rate. And I would lock in when things bottom out. So there are 2 more announcements in the pipeline, one in October. Then we've got the budget coming out in November.
Yep.
And we know that there's going to be huge spending for all the infrastructure projects, which could drive inflation again. But I still think that we're going to see at least another 25 basis points coming off prime. So if I was going to sign for a mortgage today, it would be variable, and this is the first time I would do this in 25 years.
If you're wondering if now is the right time to buy a home, maybe you're a first-time home buyer, you've been sitting on the sidelines waiting to purchase, give LJ Realties a call. You can reach them at 514-500-4040. I'm Robyn, that's Fred, that's Martin, that is Thierry. We are with you till 1 p.m. We have a question from a listener to get to this week. What is the best way to help my son buy his first home? Should I let him live at home rent-free for a few years so he can save up for a down payment? Should I be putting money into his FHSA or TFSA? Should I take out a reverse mortgage? There's so many different options. So Fred, Martin, Thierry, if you want to jump in too, what would you recommend to a parent who has a child who they want to help get a leg up right now?
Well, I can tell you this is right in line with a client of ours that put together a strategy. So his objective was to move out of his parents' house within 3 years. So what he did is he made believe that he was already paying rent. And so your son has to be an active participant.
Or daughter.
Or daughter. Well, because you said your son, so
yes,
that's why
in
son
this
or
case,
daughter.
yes.
So in this case, I'm just answering the question. So your son or daughter has to be an active participant. In other words, if they're living at home rent-free, then they can't be spending the money on a fancier car or going out 5 nights a week to fancy restaurants. So if the objective is to put aside money for a down payment, make believe that you're paying rent, and that $1,500 or that $2,000 that you're paying on a monthly basis at the end of the year is $24,000. So this guy did exactly that. And for 3 years, he was paying $2,000 a month, and he had put aside almost $70,000 after 3 years. And that's when he called us. But that $70,000, he didn't just have it lying in his savings account. What he did is he took out an FHSA, a first home savings account, and he topped that up on a year-to-year basis. From his savings or from the tax return of his FHSA, he started topping up his RRSPs, because we know now the rules have changed and you can pull out up to $60,000 from your RRSP, but you also get a tax deduction. So from that second tax deduction, he was topping up his TFSA, his tax-free savings account. So all in, at the end of all this, he almost had $100,000. But he had a clear objective. He did a work-back schedule. He said, I got 36 months. If I put $2,000 a month on a month-to-month basis over three years, at the end of those 3 years, he almost had $100,000 for his down payment. And that made it viable for him to move out. He obviously didn't use that $100,000 only for his down payment, because he didn't have a stove. He didn't have a fridge. He didn't have a snowblower. He didn't have this, didn't have that. But that was the right way of doing it. But if you're just living at home rent-free with the hopes of one day moving out, well, you got to put together a strategy.
And somebody just texted in, actually, charge your adult child rent to live at home, but then give it back to them as a down payment.
Absolutely.
Because it's difficult to trust a 19, 20, 21-year-old to actually save money,
Yes.
right, Fred?
You don't trust your kids? You don't trust your kids?
That's actually the right advice.
Help make sure that they do save.
Absolutely.
Yeah, absolutely. Okay, let's talk property management. We've got Thierry Bourbonnais from Plex DR in studio with us. So I'd love to discuss what a property manager actually does, because I don't think people truly understand the role of a property manager. I myself rent a space that is managed by Plex DR, and I have to tell you guys, my experience has been incredible. I love that Plex DR has an app that I can log into. I've set my rent for auto pay, so it just automatically comes out of my corporate business account. I don't have to worry about a thing. I can even put a little request in there. If I have a maintenance request, I wanted to get some signage out front with my business name, you just submit a little ticket in the app. It's incredible. So beyond the really cool technology that you guys have in place, what exactly is it that a property manager does? Because obviously you guys do it better than anyone.
I'm super happy to hear that, Robyn. Property manager makes sure everything in the building runs smoothly. We collect rent, handle the leases, and manage also the bookkeeping side. We also protect the asset by making sure the property stays safe, in good shape, and it stays valuable over time. We act as partner with the owner in important decision and any optimization that can make the value go forward.
So it's super important. You kind of take a load off of the owner's mind so that they don't have to worry about it. They know you guys have it all covered, right? When there's a leak in the middle of the night, they're not the ones that are getting the phone call.
Exactly. And most of the time, even if you have a leak in the middle of the night, the plumber will answer you, but he will say I'm going to come tomorrow morning. For us, with the volume that we have, the plumber is going to like show up right away because we are able to have like emergency 24/7. We're client with a lot of different partners.
Wow. Okay. And then I imagine one of the more challenging aspects is you guys are basically the mediator between tenants and landlords. Is there ever any conflict that arises and then you guys have to sort of play middleman?
Tenants want a safe and comfortable home. Landlord want their investment protected. Our role is to build a fair relationship and a positive relationship between the landlord and the tenant. We set clear expectation at the beginning, and we solve problem early to make sure both sides feel respected and heard.
Super important. Super important. Did you guys have any questions for
Well,
Thierry?
yeah, well, let's say I own a sixplex and I'm not fed up of taking care of it, but I want to free my times.
Yeah.
Is that something that right away, like, give you a call and you guys like start like, what's your services exactly?
It's exactly that, because most of our clients, let's say, they just want to have more time. They invest in their property now. They get value on it, but their time is taken by the property, so they don't see really the positive side of it. So they ask us to help with the management of the tenant and the maintenance and so on. So make sure that they have more time with their family or their different project that they have. Or it could be like just buying more property. It could be enjoying time with your young children. That's really the profile we have as client.
Like technically as a landlord, I just have to call you guys and you guys collecting the rent, taking care of anything that could happen in the property during
Exactly. We meet. I'll go directly to the property with the owner just to make sure that we are on the same page, see if it could fit with them. Also, we can really help them because our goal is to provide the value to them. So if we're able to provide value to them by servicing the tenant and them also, maybe we can guide them a little bit on some optimization to make. Then we sign a contract and we start like managing the property.
So tenant rights are really strong in Quebec. And what does the Plex doctor do to interview a potential tenant before you give them access to the property, so that a potential tenant doesn't become a nightmare tenant?
Yeah, exactly. We have system in place that we even try to push forward. So we had some situation where we have to look at the credit history, background history. That's for sure, that's baseline. But we find tenant putting name of their wife on their lease or stuff like that. So we have to check also the property as itself in the TALD or any judgment that we have before. So it's something that we try to push forward. We try to talk to previous landlord also.
Are you allowed to talk to previous landlords?
We can ask the tenant if they're willing to.
Okay.
To willing to share the information. Usually people are willing to.
Okay.
So it's an open conversation we
have.
So
in other words, if you got nothing to hide, then call my previous.
Yeah, exactly.
Okay.
We just ask the contact. Even there, we make sure it's the real previous landlord. So we'll go see if they're really the owner of the building, and then we have a contact with them and just a 2-minute talk and make sure that everything fit.
I want to talk about technology, and I know we don't have a ton of time, so maybe we'll continue this a little bit after the news, but I mentioned off the top the really cool app that you guys use. You know, I remember my first apartment when I was 19 years old. I paid my rent cash. The landlord came to our door on the first of the month, and he wrote a receipt out by hand. That's what he did for everyone in the building. His preferred method was cash. He would come on the first of the month, go to all our doors, take the cash, write out a handwritten receipt for each of us, and that was how I paid my rent. This wasn't that long ago, guys. This was 2006.
That sounds very legit to me.
But now things are different. People pay with e-transfer. You can even do automatic withdrawal. So what are some of the technologies that property managers are using now?
The technology is changing the way we work a lot. So we have the payment for sure. And on our apps, we can also have maintenance requests directly. And we have an AI that we just add on that can suggest tests and even small fixes before we even send a technician or go forward. So we can discuss with the tenant automatically with the AI, and we can jump it at any moment. If the AI will say, this is suspicious, so it's maybe a bigger problem, they will send us always like an alert.
So do you have a bot that asks Q&As? So before you dispatch the plumber, can you try to get the tenant to do his own repair or her own repair?
I am Robyn Flynn. That's Fred Pichette. That's Martin Spalding. That is Thierry Bourbonnais. Don't forget to take a stab at our trivia question of the week, by the way, for your chance to win some cookies from Felix and Norton. What is a pre-approval in the mortgage process? If you think you know it, 514-790-0800. Please include your name. We will announce the winner before the hour is up. Martin, before we went to news, you had a question for Thierry about maintenance and using these cool AI chatbots. Do you want to just reset that question?
Sure. So often now we see that when you're using websites, you're using apps, or actually even calling services, they run you through a gamut of questions so that the proprietor or the owner of the building doesn't have to dispatch somebody if the tenant can actually fix the problem themselves. But there's always that level of where, okay, I can try that, but if that doesn't work, can I speak to a human being? And so I just want to know where's that line in your applications so that you're offering good customer service, but at the same time you're being as efficient as you can with the tenant's money.
Exactly.
I'm sorry, the owner's money, so you don't have to dispatch and you don't have to charge a plumber visit to the owner of the property.
Exactly. So the AI will suggest small repairs, small maintenance at any time. The tenant is invited to contact us directly, so just to make sure that they feel heard, because it's something in property management that it's real. We need the human touch, because we don't want like the company run by AI also, because people are not necessarily like connecting directly with the AI. They will not treat it as nice. They don't feel heard necessarily. So as any time they can just say, I want to talk to the property manager, and they will call us directly or text us directly. So in that case, we're able to step in and discuss.
Because sometimes these large companies, you'll be on the phone for almost 20 minutes and you'll be screaming at the phone saying, operator, attendant, human being, somebody help me.
I had this issue with a bank last week. By the way, don't leave credit cards near where toddlers can access them, because they may cut them up and turn them into art projects. Oh, wow. And then you have to call the bank to get a new one sent to you. It takes a while to get through to an actual person, but I'm glad that's not an issue with Plex Doctor.
No, but I love what Thierry just said, is the human touch.
Absolutely.
And I think when we start to lose the human touch, and it's something that Fred and I want to talk about a little bit later in the show, but we actually saw 5 clients in person last Thursday.
In one day?
In one day.
Wow.
Yeah.
In person. So through COVID, everything went virtual.
Yep.
And since COVID, most of the world is virtual. I mean, slowly but surely, people are coming back to the offices. But I think that the human touch is so important, to sit across from somebody who's telling you what their needs are, what their financial situation is. There's the verbal and nonverbal. And so if there's anybody out there that wants to do business with us, we don't have to do it on the phone. We don't have to do it on Zoom. We're happy to get in the car, come out to your place of business, come out to your home, meet you in a cafe so that we can do it face to face.
You do house calls?
We do house calls.
We do.
Wow, that is impressive, guys.
And by doing a house call, we leave that meeting so much better informed than if we had done it on the phone or if we had done it virtually. So if anybody wants to work with Fred and I, we are happy to get in the car and come to you.
Okay, let's present a hypothetical here then, because I know you guys want to talk about refinancing. So let's say somebody calls you up and says, guys, I'm really in it. We had some hard times. My husband lost his job. We racked up some credit card debt. We're thinking about refinancing. What do we do? Homeowners are looking at this more than ever because, life's expensive these days. I just did groceries yesterday. It cost a fortune.
But if somebody's in a jam, there's no better reason for Fred and I to actually go and see that person.
Yep.
Because then they can really unpack what the situation is. And, we get to the root cause of what put them in this predicament. And by sitting across from them, we can also have access to their documents, as opposed to finishing a conversation, please send me your documents, please fill out the application. Then there's a lag time of 3 to 5 days before the stuff starts coming in. When you're really in a jam, you want to address it immediately. So if we're at their home, they've got access. Fred will actually fill out the application right in front of the client with the client. And then I will sit there and I'll go, listen, I need your T4s. I need your letter of employment. I need your pay stub. I need your IDs. And I can scan everything at your house. So when we leave, we have a fully completed file so that, if you've taken the time to call us because you're in a financial jam and you need to refinance, best that we come out and see you and get it all done expeditiously.
What is the most common reason, Fred, that people are coming to refinance? Is it to consolidate debt?
Obviously, consolidate is a big one, but again, just give you an example. If you had signed your mortgage 2 years ago in 2023 at a high rate at the time at 5.5, around 6%, now the interest rate is around 4%, and maybe a good time to reassess that, because yes, obviously you have a penalty to pay, but maybe the new mortgage rate and the saving that you're going to make could offset that penalty. Like that is one of the reason. Also, another reason that I see often is, let's say you had a line of credit, or we call that a HELOC, a home equity line of credit, and for whatever reason your balance going like up to 50, 100, 150,000, even $200,000. Obviously, if you're carrying that debt for more than 6 months or a year or 2 years, you're not going to pay it down. And a line of credit, the interest is prime rate of Canada, which is it's variable, prime rate plus 0.5. If we take the example today, it's 4.7, which is the prime rate of Canada, plus 0.5. You're talking about an interest rate of 5.2 that you have to pay right now. Like it's better off sometimes to close that line of credit if you can't pay it, reinstruct a new mortgage on 25 or 30 years at a mortgage rate of 4%. Actually, you're paying lower interest rate on a mortgage than on a line of credit. Like that's another reason as well that you could also decide to refinance your property.
What are the
Because the other thing, building on what Fred just said, the perfect time to refinance is at renewal, because there are no penalties.
right?
So, we know that the vast majority of mortgage holders across Canada are renewing in 25, 26. So before you just accept the renewal offer from your current lender, why don't you ask yourself, am I carrying some bad debt? Do I need to do some home renovations? Are my kids going to university? What is my financial situation? Does it make sense just to renew and just carry forward those debts? Or should I just say, listen, I'm going to take the time at renewal to refinance my mortgage because of these debts, and I want to consolidate everything under one mortgage. And do you want to amortize over a longer period of time? In other words, if you're hemorrhaging because your monthly payments are just too high because you've got 15 years left on your mortgage, why don't you bring it back up to 25, bring it up to 30? And then even over the lifetime of your mortgage, you'll end up paying more interest. Fred often says it. Yes, you will pay over the lifetime a little bit more interest. But if you do some lump sum payments on a monthly basis, you can offset that by paying down the principal.
And you're not obliged to make a high payment every month.
Yep.
Like it's a win-win situation sometimes.
What are the costs associated with refinancing? Presumably, if you do it at renewal time, it costs you nothing.
Well,
nothing is, because when you're refinancing, actually, you're starting from anew. So in other words, most likely that the lender that you're going to send your mortgage to will want to have the property appraised. Some lenders pay for the appraisal. Some put the onus on the borrower. You'll have to go back to the notary. So there is a notary charge. If you break, not at renewal, but if you break early, there might be a penalty. So all of these things are things that we will discuss with you to give you line of sight as to, is the best time to do this? If it's at renewal, there are still some costs at renewal, but those costs will be offset by the savings that you will make by consolidating your debts that you're paying 22, 24% compounded daily on a credit card. Why don't you slide that into your new mortgage and start anew and reset?
I have what might be a silly question. Those costs that you outlined, the notary and all of, potentially penalties, can that be deducted from the new amount that you're withdrawing, or do you have to pay that up front before you get the money?
no, of course, it'll be deducted at the notary.
Perfect.
And that's why sometimes I often hear people says, yeah, I don't want to break my mortgage because I have a penalty. Yeah, but if you're carrying 20,000 of bad credit debts at 22% and compound daily, if you can't keep up with the payment or you make the minimum payment, you're never going to get rid of this debt. Like sometimes you're better off breaking your mortgage, make a small reset, clearing all your debt and start fresh.
Because there is a point of no return. You get $10,000 in debt, maybe you can dig yourself out of it. You get to 15, 20, 30,000, you're never going to dig yourself out. You're going to be paying interest over interest over interest over interest. So at renewal, it's time to take a step back and really sort of like regroup to redeploy is a word I like to use often. And you have to look at your financial situation. And does it make sense with all the fees and all the penalties for you to refinance or renew?
If you want to find out what your options are, get in touch with Fred and Martin. You can do it by going to their website at fredandmartin.com. All right, so we're talking about refinancing mortgages and all of the different things that come with that. Little technical issue in studio.
You know why? Because people don't believe it, but we're actually live in the
live
studio.
in studio.
And we're talking about refinancing, we're talking about renewals, and people are calling us to book appointments. So, I mean, I promise I will call everybody back, but we got to finish the show. So call me back at 1:05 because I've just turned down 3 phone calls.
Oh my goodness. That's incredible though. Yeah, people may not know, but if you follow Under One Roof MTL on social media, we do post videos and stuff from the show. So
it's actually funny because on the video, I've got the clock behind my head today. So we can actually see it's 10 to 1 on Sunday.
Yeah, you're super duper live. So if you just tried to call Fred or Martin, hold tight.
Just hold tight. We finish at 1 and I can be in the car. You can call me and we'll take the time to have a conversation.
Now, we were chatting off air, Martin, about people who are refinancing early. A lot of people are refinancing right now, and that is coming with delays that you may not expect.
Well, see, what's happening is that you would have thought that the big banks or the lenders would have factored in the fact that everybody in 25, 26 are renewing their mortgages. Perhaps they didn't. Perhaps they don't have enough staff to
supply the demand.
To supply the demand. The underwriters are overwhelmed. So the delays are huge. So, I mean, time and time again, we talk about start early, but this is more the case than ever. And the other factor that is really becoming problematic is there's a lack of notaries. And so if you're refinancing, you got to go to a notary because it becomes a brand new mortgage. If you're buying a property, you got to go to the mortgage. You got to
also go to the notary.
You also go to the notary because it's a brand new transaction. Notaries are also overwhelmed. So there are huge delays with the lenders right now, and there are huge delays, or even trying to find a notary that is prepared to take your file in a timely fashion is becoming problematic. And the other variable in that is that some notaries don't do all transactions. Some notaries don't want to refinance with monoline lenders. Some notaries don't do reverse mortgages. So once you've found a notary, be crystal clear with that person what your transaction is all about, because sometimes they'll say, yeah, I can take your transaction. And then when the transaction comes in other words, when the lender instructs the notary, they go, oh, I don't do that. And then we get a phone call and there's a panic because there are deadlines in all these things, and the deadlines, unfortunately, are not respected. So there are no bad questions. Ask those questions
Yes.
or ask us.
Speaking of weird questions, I have a weird one for you. When you refinance your home, do you have to pay the welcome tax again?
No.
No,
of course not.
That's
no.
only for a brand new purchase.
It's only when you purchase. It's
'Cause
only when the community welcomes you.
I
And they
know-
only welcome you once.
I know somebody
Thank God.
who got divorced and they had to buy out their partner and take out a second more. It was complicated, and they did receive a welcome tax bill. They fought it and didn't end up paying it. There was some sort of technical, communication error, but you should not be paying a welcome tax a second
It's
time.
funny you bring up divorces because actually, unfortunately, 50% of marriages end up in divorce.
Yep.
And unfortunately, we've gotten pretty good at managing divorces. We're not therapists. We're just there to handle the transactions. But divorces come with their own set of challenges, especially if one person wants to buy out the other.
Yeah, very complicated. Okay, I want to get to the answer to our trivia question of the week because people are texting in like crazy, which is great to see. Our question is brought to you by the Felix and Norton Cookies. You can visit them at the Blue Haven Shopping Center, 3705 St. John's Boulevard in DDO. Our question this week was, what is a pre-approval in the mortgage process? So pre-approval is a lender's conditional commitment to lend you a certain amount based on your financial information before you choose a property. Now, there's a difference between a pre-approval and a pre-qualification. Pre-qualification is basically worthless, right?
Well, the way that we do it, so when you call Fred and I up and you want to be pre-approved for a property, it's just not an application that you fill out. The application has to be supported by documentation. So we make believe that you're actually going through a transaction right now. And so when we send you a letter of pre-approval for your mortgage, as they say, you can take that to the bank because we have done our due diligence. In other words, as long as your revenues and as long as your debt load and as long as everything that you've told us is true the day that we pre-approved you, as it is 90 days later, our pre-approval is golden because we have done it with documentation.
So pre-qualification, that's like when you go online on a website and it's like get pre-qualified in minutes.
In 10 seconds.
Yeah,
It
you
has
just
been
you
done
put
with-
like your name, your income, but it didn't verify anything.
So there's no credit report there.
Yeah.
There's no debt load. There's no documentation. There's nothing. It's just, so often we get a phone call. Oh, I filled out an application. I'm pre-approved for $1 million. Really? Okay. Let's start anew. Fill out our application. Send us your documentation. And we'd rather do this methodically so that there are no unfortunate surprises. Because once you've made that offer and your offer has been accepted, the person selling that home is under the impression that you're good for it.
Yeah.
And so the way we do it is a little bit more laborious. It takes a little bit more time. But once you have made that offer, we know we'll get you past the finish line.
Somebody texted in, I paid welcome tax twice on the same home. It sounds like they shouldn't have had to, but I guess there's always extenuating circumstances.
I'd really like to know what the situation was that forced him to pay or forced her to pay the welcome tax twice.
Yeah, it's unfortunate. Okay, so congratulations to Neil, by the way. Neil in Côte St. Luc, I believe. Yeah, Côte St. Luc correctly answered our trivia question this
And if
week.
Neil needs to be pre-approved, all he has to do is give us a call.
Exactly. Speaking of which, where do people go to give you guys a call? People, your phones are ringing off the hook. People are ready to get to refinance. And where do people go?
So the easiest way to track us down is fredmartin.com. Mm-hmm. But we want to come back to the conversation we were talking about customer service. And a lot of people don't think that we're willing to come out to their homes or meet them in a cafe. But more than ever, we think it's a good idea for us to sit down person to person and fill out the application together. Get the documents from that person at that meeting so that when we turn around with our strategy, our suggestion, our pre-approval, we've already done our due diligence. And there's no va-et-vient, broken telephone, mis-scanned documents. We do it all during that meeting. And if the meeting takes 3 hours, it'll take 3 hours.
It makes sense to go to people's homes because they've got all their documents in their home
Everything's there.
office,
That's
right?
where the bunker is.
Yeah.
Well, last week, I don't know why, but we went to meet a lot of people, a lot of our clients.
Well, I'm going to be welcoming you to my house
exactly.
soon, so you guys can help me
With
start.
pleasure.
Absolutely.
My mortgage is coming up for renewal soon. LJ is off this week, but you can and should still check out the LJ Realties website at ljrealties.com. You can follow him on all socials at LJ Aguinaga or text him at 514-500-4040.
What about the Plex Doctor?
Exactly. That's my next question. Thierry, where do people go to get in touch with you? I've got people texting in asking for your website, so people are super stoked.
Awesome. So they can go on our website. It's www.plexdoctor.com. They can also reach us by email or any phone. It's possible.
Perfect. So that number 514-709-6397, by the way.
So Robyn has opened a new podcast studio, and I saw LJ recording some videos at her new studio. Robyn, why don't you tell us a little bit about it?
Yeah, so Studio 15 opened a few weeks ago on the South Shore. It's one of the only recording studios on the South Shore, which is pretty cool. And it's the only recording studio in the Greater Montreal area that's owned by a woman, I'm proud to say. So,
woohoo!
yeah.
Congrats.
So if you want to come check it out, we can facilitate podcast recordings, short form content for social media. If you want to film some corporate training videos for your staff, maybe you're a union and you're looking to create some content for an anniversary that's coming up, we've got a 3-cam setup, we've got mics, we've got everything you need.
And how do we get in touch with you?
lestudio15.ca, or you can call us at 450-698-0909 is the way to get in touch with us. That pretty much does it for us for this week. If you have any questions for the guys, you can email us at info@underoneroofmtl.com. If you missed anything, you can check out this show in its entirety on iHeartRadio, Spotify, Apple, or wherever you get your podcasts. For Thierry, Fred, and Martin, I'm Robyn. Have a great Sunday.